And welcome to our New Year special, looking ahead to 2023. China recently lifted its COVID control policies. Its economic outlook quickly got a boost. Many investment banks, including Morgan Stanley and Goldman Sachs, now forecast growth in 2023 would top 5%, some even expecting a boom cycle. But the optimism is not shared by all. So what does Chinese economy face going into 2023? What does it mean for the world economy still grappling with high inflation and geopolitical tensions? To talk more about these issues, joining me now are three distinguished guests: Alessandro Teixeira, professor at Tsinghua University and former Minister of Tourism and Executive Minister of Development Industry and Foreign Trade of Brazil. Welcome to the show, Professor.
Thank you very much for having me.
Sebastian Eckardt, World Bank Practice Manager for Macroeconomics, Trade and Investment in East Asia and the Pacific region. Thank you for joining us.
Thanks for having me.
And Guan Tao, Global Chief Economist of BOC International. Thank you for your time today, Dr. Guan.
Yeah, thank you for having me.
And Happy New Year to all of you. And let me start with the assessment of China's economic outlook. Professor Teixeira, what is your view on the economic outlook? Is a recovery on the way?
I do think so. Comparing to 2022, I think China is going to do better in 2023. Of course, there is some question marks about how the world economy is going to move forward next year. We are having a forecasting that a lot of economies, not saying half of the world, can be in recession in the first or the second semester. So that's a big question mark because now China it's in the value chains in the world. So that's one of the question marks. But my assessment is that the internal market of China being held at least for 2 years is going to help the Chinese economy to expand for next year, for this year, in fact.
Professor Eckardt, do you share the optimism? Will the road of recovery be bumpy?
So I think I broadly share the assessment. Clearly, the relatively rapid relaxation of COVID-19 restrictions has set the stage for a strong recovery, especially of the domestic economy. I think we expect the first quarter to still be a little bit weaker, partly because the first wave of COVID infections is still going to have a lingering impact into this year, the beginning. But then after that, I think we expect that domestic consumption and investment will recover strongly and lead the recovery. Having said that, I do agree that there are some headwinds. I think domestically, there's still some uncertainty related to what's happening in the property sector. Again, we expect some improvement this year compared to last year, but still there are some headwinds coming from that sector that is obviously quite important domestically. And I very much agree that the global economy looks like it's going to post much weaker growth, with practically all major economies expected to move in a down business cycle in contrast to what we are seeing here in China.
And Dr. Guan, so Professor Teixeira is broadly optimism, and Dr. Eckardt pointed out that it may have a slow start to 2023. We may have some difficulties in the first quarter. What's your view on this? When is a turning point to be seen?
I am optimistic about China's economic recovery in 2023 with 4 reasons from internal factors. The first one is an optimization of pandemic prevention and control policy, which will help boost domestic demand. Although China's economic and social activities are impacted by the increasing infection in the short run, pent-up demand is expected to unleash after the normalization of social activities, especially in contact-intensive service sectors. The second reason is the property market risk has been paid a lot of attention and is being addressed. Downward pressures in the property sector have emerged since the second half of 2021. The 2022 Central Economic World Conference voted to ensure the stable development of the real estate market. With the help of many supportive measures, both on the demand and the supply side, the real estate market is expected to bottom out in 2023. The third one is the continuous support of macro policies. Stabilizing economic growth is the top priority in 2023. The government made it clearly that more policy support will be provided for the macro economy. Just recently, PBOC pledged that the monetary policy should be sufficient in aggregate terms, also more targeted structurally. The overall monetary support should be no less than the level in 2022. The last reason is the lower base effect. Over the past 3 years, China's compound economic growth rate has been around 4.5%, which is slightly below the potential level. As the Chinese economic growth is moving back to the potential level, the economy will likely rebound or even briefly exceed the potential in 2023. But definitely it will be not straightforward. Yeah, there's some bumping prospect.
Do you think the first quarter will be difficult?
Yes, first quarter will be difficult, yeah, because the economy will be hard hit by the infection or COVID-19.
Do you have a number for whole year economic growth?
Yeah, according to my house estimate, the whole year forecast will be around 5.3%.
Professor Teixeira, do you have a number for China's economic outlook?
Yes, we are thinking about 4.5 to 5, so I would say around 4.8%.
Professor Teixeira, as Dr. Guan just pointed out, China may have a slow start due to the impact of COVID-19 control policies. What do you think about the impact of the policy on China's growth in the short and in longer term?
I think, as pointed out by Sebastian, I think the first quarter is going to be bumpy because we don't know what extent the COVID-19, especially after the New Year's, is going to be related, especially in the Chinese internal market. So that's the first question. It's a challenge, but I think after the first quarter, China could recover a little better. And again, as I just mentioned, we need to see how especially developed economies will face the question of inflation, some with unemployment, and also the recession or stagnation. What I can tell you from the emerging markets point of view, and also from Latin America, is going to be a rough year in Latin America and a rough year for emerging markets. So China, as we know, is one of the main countries that guarantees or helps the world growth, more than 20%. So I think this part is going to be a little bigger for this year in 2023. So I'm expecting a good growth of China, but very bumpy in terms of the world economy, especially if we have, for example, the war continue between Ukraine and Russia. This is going to, I think, getting the scenario a little bit worse than we are expecting.
I think very certain expectations means a lot for business confidence. And Dr. Eckardt, do you have a number for China's growth potential in 2023? And in your opinion, what will be driving the growth? Will it be consumption or will it be investment?
So our number is slightly more conservative. So we are at 4.3 right now, but we do see obviously risks both to the upside and the downside. Now, in terms of the drivers, clearly it will be driven by the domestic recovery. I think we will see a consumption rebound with a lot of pent-up demand, including in service sectors where, of course, especially contact-intensive sectors have suffered and remain well below pre-COVID levels. And there's a lot of potential for recovery in areas from retail, tourism, hospitality services, and so on. So that's clearly going to be a factor. I think we also are going to see a stronger investment, both because we see some likely improvement, slightly better prospects on the property front, as well as, of course, we also expect that the government is going to continue to support and solidify the recovery through fiscal policies, and that should help boost infrastructure investment this year. Offsetting that to some extent is, of course, the expectation that global demand will weaken. In fact, it's already started to weaken. In the last few months, we've seen that exports have moved into negative contractionary territory already in the last quarter last year. And I think everyone expects that to continue. And that, of course, is going to weigh on the export-oriented sector somewhat dampening the otherwise strong domestic recovery momentum that we are expecting this year.
So the pressure mainly comes from the external environment. And Dr. Guan, in your opinion, will Chinese equities rebound next year after a lackluster 2022? Will it be attractive to global investors?
Yes, I think Chinese equities will rebound and be attractive to global investors in 2023. In 2022, global stock markets experienced the biggest annual decline since the 2008 global financial crisis. Global financial markets are much more integrated nowadays, and China is not immune to external shocks. The most important factor behind the stock market turmoil was the Fed's aggressive tightening. Although Chinese macro policies stick to domestic goals and remain supportive, the Fed's unprecedented tightening to some extent still dampened market confidence. Besides, there were unexpected shocks from the pandemic on the Chinese economy last year. But some downside factors will reverse in 2023, while some favorable factors continue to accumulate. Of course, there will always be many uncertainties. The major one is the development of the U.S. economy and the Fed's policy, just as the professor mentioned. So some uncertainties coming from the external side. Currently, financial markets pay close attention to the U.S. economy, especially whether flashing recession signals would come down to reality. This would shed more light on the Fed's future policy path. Many believe that the global stock market would experience another correction given the possibly higher rates and worsening in economic fundamentals. Although slowdown in the U.S. economy will affect China through export and the financial market, China's domestic economy will likely rebound this year, and the internal demand would be the new driver for growth, both consumption and investment. The improvements in fundamentals would serve as one favorable factor for China's stock market. So I think it will make Chinese equities be more attractive to international investors.
And Professor Teixeira, in your opinion, what can be done to foster a recovery momentum? Do you think the government have ample policy room?
I think there is several elements that I believe China government is doing. When we see the model of development of China on dual circulation, meaning export matters are important, international markets are important, but we need also take care of the internal market. As Sebastian just mentioned, tourism is a very important element in terms of investment, in terms of promotion, because that's booster the service market. Just to remind, in 2022, the sector had a drop over 74% in China. So I think now we're going to see not only more people traveling, but using different services in China. So that's consumption is very important in China. And with consumption, that makes the international markets look to China as one of the gates for investment. So in that case, consumption is going to lead the Chinese growth, but afterwards we're going to have investment. So consumption and investment are the two elements that I'm looking at a very strategic point, and that means that the government needs to still easing up, is still improving, modernize the service sector, especially with the technological and digital modernization of the service sector in China, and easy up not the foreign direct investment only, but helping the private sector and also the state-owned enterprise to increase their investment level in China. So I think there is a lot of new little reforms, microeconomic reforms that the Chinese government is looking at and will do in 2023.
And Dr. Eckardt, in your opinion, what areas should get extra government attention to promote a sustainable economic recovery?
So I would highlight three areas. One is public health. That remains important because we know that adjusting to living with COVID has taken time in many countries. And in many ways, there are still measures that are important that can make the reopening safer and less disruptive. For example, vaccination rates, treatments in case people get sick, and of course also managing hospital inflows and so on to ensure that the most severe cases are treated with the limited capacity that is available. On the macroeconomic front, I think, as we've all mentioned, we all expect that there is going to be continued policy accommodation, both on the fiscal and the monetary side. Clearly, on the fiscal side, the government does have policy space, especially at the central government level. It's a bit more difficult, more challenging at some of the provincial level governments, subnational governments that are facing relatively high debt burdens. But in principle, there is fiscal policy space available now, directing that policy support to areas that will not just support short-term demand and investment, but also long-term objectives, for example, greening the economy, hence, for example, investing in low-carbon technology, energy supplies, and so on, as well as consumption, supporting rebalancing towards consumption, would basically not just support the short-term recovery, but then also lay the foundation for sustainable growth going forward. On the monetary side, I think it's of course, China sort of stands out as not having faced very high inflationary pressure until now. Now, with a demand recovery domestically, we'll have to be vigilant to see what will happen. So I think there is also room for continued accommodation in principle, but we have seen some pressures on the external side, on the exchange rate, because of the growing interest rate differential with the US. So there is, again, a bit of a balancing act, but in principle, I would expect continued support from both monetary fiscal policy. And then lastly, and I don't need to elaborate here, I very much agree with Professor Teixeira that microeconomic and structural reforms to boost competitiveness, including liberalizing some of the service sectors that are still subject to restrictions, could again help in the short run by boosting confidence of investors, but also, of course, be a good thing in terms of supporting long-term growth potential in the economy.
And Dr. Guan, what's your view on China's monetary policy and fiscal policies? Do you think China has enough room for fiscal stimulus, especially more provincial and local governments? And on monetary policy front, do you expect interest rate cuts in the near future? And what will be the impact on capital flows, considering China may be the only major economy which has relatively easing stance on its monetary policies, while the rest of the world are tightening?
I think we can expect more policy support for the macro economy. With regarding on fiscal policy, the government pledged to strengthen fiscal spending intensity and enhance fiscal spending structure. And with regarding the monetary policy, compared with the Western countries, I think PBOC still have some room in rate and triple cuts. With regarding adjustment of policy rates, it must weigh on how much fluctuations of the RMB exchange rate we can stand up. The good news is that the market is now pricing a slower pace of Fed rate hikes in the first half of this year and a rate cut at the end of the year. The dollar has also shown signs of weakening recently. So it makes sense for China to adjust the interest rate accordingly. However, if the situation turns out to be not what the market expected, we may have to embrace the adjustment or downward pressure on RMB exchange rate if we are to change the interest rate. Of course, if the interest rate cut could bring in a strong recovery and the improvement in market sentiment, it would be also a wise choice.
Well, thank you. And despite the disruptions of the COVID-19 pandemic, foreign direct investment into China grew by 9.9% in the January to November period in 2022 year-on-year. After the recent changes in COVID policies, many foreign firms are also upbeat about China's economic outlook. For example, American Chamber of Commerce President Michael Hart said the easing of COVID-0 policies would pave the way for improvement in business, but some in the West are promoting the idea of decoupling from China or China's supply chains. Professor Teixeira, is China still attractive to foreign investors? Do you see more investment flows into China in 2023 or less?
No, I see more. China is still very attractive. It's going to be more attractive just for one reason. China is still growing when the half of the world is going through recession. So of course, investors, they look at that. Number two, China is leading in many technological sectors that are very, very important for the world economy. So, of course, European companies, American companies, they are still investing. Of course, we have the political tension between U.S. and China, but there is no way to see a decoupling from American economy or for the European economy regarding to China. They may try, but if you understand the global value chains, you're going to see that it's impossible, virtually impossible to have decoupling. So in my perspective, FDI is going to grow in 2023 for sure in China.
And Dr. Eckardt, what's the impact of the pandemic on China's supply chains? Is decoupling from China's supply chains possible?
Well, I agree with Professor Teixeira here. I think while there might be some move by companies and governments to try to diversify supply chains and reduce dependency on single origin markets, especially in sectors that are strategically important, there will be limits to the extent that this is going to be possible, and it be sort of affecting a broader FDI into the economy, because fundamentally China, of course, is still an attractive destination for two reasons. One, it has a large domestic market, so make in China for China is going to be important for many consumer-oriented global companies. And at the same time, on the supply side, China, of course, does continue to have unique industrial capabilities, infrastructure access, still a large pool of relatively affordable labor that attracts investment into productive sectors. Now, there are things on the policy side that could be done to further stimulate investment. And again, just to reiterate that point on the service sector, which is going to be important and an increasingly important driver of growth for China going forward, there's still some room to liberalize and to open up and to actually attract more high quality FDI into those sectors.
And Dr. Guan, China recently raised the concept of high standard opening up, which involves the changes of rules and standards in China to better serve foreign investment. What concrete measures can we expect, and how will that attract foreign investors?
The 20th National Congress of the PPC and the 14th five-year plan mainly laid out the opening up work in three aspects. The first one is to steadily expand institutional openings, such as rules, regulations, management, and standards. Meanwhile, improve the management system of national treatment and make further reductions of the negative list, aiming for better foreign investment access. The second one is to promote innovation and accelerate the transformation into a world trade power. In the future, China will foster a new development paradigm in which the endogenous dynamics of the dynamics and the reliability of domestic circulation should be strengthened, and while the quality of external circulation should be elevated. China will further reduce the import tariffs and institutional costs for high-quality consumer goods, advanced technology, and key equipment components to improve import structure. The third one is to maintain a diversified and stable international economic structure and trade relations. China is actively promoting the negotiation of bilateral, regional, and multilateral economic and trade cooperation, also highly engaged in the reform of international trade organization. The 2022 Central Economic Work Conference also mentioned to strongly boost market confidence by comprehensively deepening reform and opening up. Foreign companies are important market players in China. Especially, China will make more efforts to attract foreign capital by providing the greater convenience and facilitating the launch of landmark projects.
Well, thank you. And Professor Teixeira, in your opinion, what more can be done to make China attractive to foreign investors? Also, I'd like to mention many firms are diversifying their supply chains because of not because of the competitiveness of Chinese supply chains, but because of the geopolitical tensions. In your opinion, what can be done to foster the resilience of global supply chains?
I think the first element that we need to have very clear, to diversify value chains is not easy. When you develop a supplier, it takes a long time. So you cannot do that from day to night. So that's the first element. Second, many companies, they are in the middle of trying to diversify. So there is an element that they could go back to traditional suppliers in China because now we have the easing COVID-19 element. So that's the first thing. So I think there is some diversification, but that's not easy to achieve. So I think the first element that the government is looking at China is to easing up the 19 COVID. That was one of the points that many companies, they look from Asia to Latin America, for example, to try to find suppliers. But that's not easy because the situation in Latin America, macroeconomically speaking, is not in a good perspective. So that's the first point. The second point, I think the government of China is looking at the fiscal level and monetary level, but more in the fiscal level, and they know they have some space to help the companies to be more competitive. And we are talking not just in production, but we are talking about payment terms, we are talking about logistics. So all these elements we need to see as a booster for China, not only continue I would say going up the ladder in terms of the value chain, but also helping China to be more competitive. And then I just said, third point is I think the Chinese government is looking very careful what's the macroeconomic reforms they can do in these difficult periods to increase competitiveness. And for sure, continue the opening up, liberalization of certain services that are strategic are very important elements, and I'm very optimistic with these little reforms that are very important that China will take it in 2023.
And Dr. Hart, I also want to hear your view on this. Is it difficult for China to move up the value chains? What are the challenges that China face? Because it seems the United States is trying to cut China off from its high-tech supply chains.
And so I think, as I mentioned, in many ways, the key is really to continue to open up in those sectors that are still relatively restrictive. And that is good because it actually helps competitiveness. Access to high quality services, for example, can boost even competitiveness of manufacturing sector. And the same way as China has used opening up to boost the competitiveness of its industrial sector by exposing it to international and global competition, I think the same way it can do that in service sectors. And that also at the same time will address some of the concerns some of the trading partners have expressed with regards to some sectors being relatively close to competition from global companies.
And Dr. Guan, in your opinion, how did China contribute to global supply chain resilience in the past 3 years, and how can China keep doing in that way?
Yeah, I think China's role in the global supply chain is not easily replaceable. Since the beginning of the pandemic, the resilience of China's industrial and supply chains has attracted worldwide attention. When the global economy came to a standstill, China took the lead in resuming production. Thanks to the policy of protecting market entities, China's production has remained stable, effectively filling in gaps in global supply. Also, a higher level of reform and opening up policies continues to advance, and the business environment continues to improve. For example, RCEP came into effect in January 2022, further facilitating foreign investment in China. Meanwhile, the Chinese government has been promoting national treatment and improving negative list management for foreign investments. The foreign investment negative list nationwide and for free trade zones implemented in 2022 has been reduced to 31 and 27 articles respectively, a reduction of 6.1% and 10%. The latest catalog of industries for encouraging foreign investment has increased by nearly 20% compared with the 2020 edition. So I think China will still play a very important role in global supply chains.
Thank you. And economists are predicting a potential sharp slowdown of world economy this year. The IMF warned 1/3 of the world economy could be in recession in 2023. Professor Teixeira, in your opinion, what role would China play in global economy next year? In what areas can Chinese economy contribute to world economic recovery?
I think the IMF and the World Bank are seeing the situation getting deteriorized as time goes, and for the world economy, especially for developed countries, but also the emerging markets. So China has not a responsibility, but a very important role, because we need to remind that more than 20% of the world growth is responsible directly for China. So I think this number is going to be a little increase in 2023. And I think China, to help the world economy, needs to help itself. So increasing growth, depending on domestic market, is very important. Also, continue opening up and internationalize its economy helps a lot, because we need to always remind that China not only is one of the largest countries to receive FDI, but also to invest abroad. So keeping the fate of the world economy and helping countries to overcome challenges are very, very important. So when you look to my region, Latin America, China has been one of the most important trade partners, or not only Latin America, but over 140 countries. China is the first trade partner, but also it's a very, very important investor in the region for infrastructure, for improving competitiveness. So I think China needs to continue moving forward in those agenda, and that's going to be a very important role in the international economy.
And Dr. Eckardt, what is your view about the impact of China's recovery on world economy?
So I think clearly, with many other major economies facing a downturn, and China being on the other side of the business cycle with the recovery, China is expected to contribute more to global growth this year than it has last year. On the demand side, that will be important. It will basically create a stronger global demand. I'm overseeing countries in the region and in Asia, and many of these countries, for many of these countries, China is already the largest trading partner. It's also in places like Cambodia and Laos and elsewhere an important source of tourism, as Professor Teixeira mentioned. And these countries are eagerly awaiting the return of Chinese tourists, hopefully later in the year, as travel restrictions have been eased, and that should give a boost to these economies. In addition to the demand channel, I think there's another element that might be important with some of the supply disruptions also easing up. Hopefully, China's recovery will also contribute to easing some of the inflationary pressures that we've seen in the global economy. And of course, that will be good news for everyone, because it will reduce the pressure for additional interest rate hikes. And of course, that in turn will hopefully dampen the downturn that we are expecting.
Dr. Guan, do you think China's recovery will add to the pressure of inflationary outlook? And China's November export dropped more than 8% due to weak overseas demand. What are the prospects of China's export for 2023? Will China become a stabilizer in global trade?
Yeah, I think China's export growth rate fell more than anticipated in November 2022. It indicates that the lingering effect of overseas monetary tightening has gradually kicked in. Major international organizations have lowered their global economic growth and world trade growth forecast for 2023. Historical experience shows that the growth rate of China's exports is highly correlated with the global economy. China's imports will likely be under downward pressure in 2023 amid the external demand slowdown. However, I think even if global demand declines, the proportion of China's exports to emerging markets may increase due to the implementation of regional economic and trade agreements such as the Belt and Road Initiative and the RCEP. In addition, the IMF's latest forecast shows that the economic growth rate of emerging economies in 2023 will be the same as that in 2022, while the growth rate of advanced economies will decrease by 1.3 percentage points compared with 2022. As Professor Eckardt mentioned, with China's easing COVID restrictions, cross-border activities would be gradually returning to normal, which will help neighboring countries, some Asian countries around China. At the same time, strengthening coordinated development with emerging market countries will stabilize China's foreign trade and mitigate the impact of foreign demand in advanced economy.
One more question for Dr. Eckardt. Do you think there is a need for coordinating monetary policies across the world, especially between China and the United States?
Well, I think monetary policy, of course, always responds to the business cycle in the domestic economy, first and foremost. That's true for every central bank. Having said that, of course, in a global economy that is increasingly interconnected, there's always benefits to coordinating policy responses as much as possible. But clearly, we see this year, we will see that the business cycle in China is moving in a different direction from what we are seeing in the rest of the world. And in fact, already last year we saw a divergence in policy, and that was between China and many other many other major economies in the world, because at that point also the business cycle was in a different position in China relative to the rest of the world, and that determines ultimately what's the appropriate policy stance that the authorities will take in any country.
Okay, that's all the time we have for today. Thanks again to all of you. Alessandro Teixeira, professor at Tsinghua University and former Minister of Tourism and Executive Minister of Development Industry and Foreign Trade of Brazil, and Sebastian Eckardt, World Bank Practice Manager for Macroeconomics, Trade and Investment, East Asia and Pacific Region, and Guan Tao, Global Chief Economist of BOC International. We appreciate your insights. And that's all for this edition of Looking Ahead to 2023. I'm Guan Xing in Beijing. Until next time, bye for now.